Welcome back to the deep dive, where we cut through the noise and try to unlock the hidden signals in today's markets. Today, we're digging into the Lotusbee Market Digest, July 28, 2025. And right off the bat, it paints a rather interesting picture. A market that feels, well, undeniably bifurcated.
Yeah, definitely. Our mission here is to distill the really important nuggets from this daily snapshot, helping you understand not just what moved, but, why it matters to you. And what underlying story these numbers are really telling. Is this split market a sign of, let's say, underlying strength or maybe a flashing warning?
Okay, let's try and unpack this then. While the S&P 500, it managed a very slight gain, plus 0.02%, and the Nasdaq Composite climbed a bit more, plus 0.3%. But that's not the whole picture, is it?
No, not at all.
The divergence really comes with the Dow Jones Industrial Average dipping in at a 0.14%. And the Russell 2000, the small caps, also down at a 0.19%. This isn't just, a mixed bag. It feels like it reveals a very specific narrative, like a narrow market rally.
Exactly. And what's truly fascinating is how the Lotusbee View section actually pinpoints this very split. Observing that, and I quote, tech continues leading, which buoys the Nasdaq, while cyclical and small cap indices tread water.
Right, treading water.
This isn't just about the day's momentum. It signals a market that's kind of grappling with uneven recovery. Are we seeing a robust, broad-based rally? Or is it more fragile, just driven by a few big tech companies? That's the deeper question this bifurcation raises for investors, I think.
So if tech is really propping things up, what does that say about the broader economic health? Outside those high-growth sectors, is this split a sign of a strong, focused recovery or maybe a more fragile market relying on just a few giants?
Precisely, yeah. It suggests that while, innovation growth stories are compelling, the foundational bits of the economy, represented by those cyclical industries and the smaller companies, they aren't yet seeing the same conviction from investors. Not quite yet.
Okay. And if you thought the equity markets were complex, well, the crypto world today presented an even more fascinating contrast. Almost contradictory, maybe. Bitcoin was trading just below $120,000, down modestly, sort of consolidating after those recent highs. But what was happening elsewhere in crypto?
Right. So while Bitcoin takes a bit of a breather, Ethereum actually continues to rally. It's above $3,700. And notably, the report says it's driven by ETF inflows and institutional demand.
Ah, the institutional money.
Exactly. This highlights a pretty significant shift, mainstream financial products, big money, legitimizing Ethereum.
Yeah.
But in stark contrast, Solana and Cardano, well, they're both under pressure, down several percent each.
Ouch.
Yeah, highlighting how the broader altcoin market just remains vulnerable to sudden swings and, importantly, that looming shadow of evolving regulations. It's a clear divergence, really, based on perceived utility, maturity, maybe regulatory clarity, too.
Okay. So while traditional markets and crypto were battling these divergent forces, how did the more, let's say, foundational commodity space, like metals, fare today? We saw gold at US $3,313.10 an ounce, down just slightly, managed 0.02%. Silver at US $38.06, also down a tiny bit, managed 0.07%. Copper, though, interestingly, it inched up plus 0.12% to US $4.43 most pound.
And the Lotusbee View, it describes these as, quote, trivial moves, but it also notes that metals are firming.
Firming, interesting term.
Yeah, this overall stability, even with those slight daily dips, it suggests a different kind of quiet confidence, maybe, at least compared to the more volatile equity and crypto markets. It's subtle, but an important signal, perhaps.
Lotusbee calls them trivial moves, sure, but in a market this, volatile. Couldn't even a slight firming in metal suggest maybe a quiet hedging strategy, perhaps anticipating inflation or, other macro shifts that aren't quite hitting equities yet?
Absolutely. That's a great point. While it's not dramatic, that's steadiness in metals. It might indicate that some investors are, quietly positioning themselves maybe as a hedge against future inflation, like you said, or just broader economic uncertainty. Even while the tech sector grabs all the headlines, it's kind of a classic safe haven play that often flies under the radar.
Okay, so if we pull back a little, try to see the bigger picture, what does this all mean? Lotusbee points out that investors remain vigilant on Fed signals and upcoming earnings reports, with rotation remaining in focus. What exactly do they mean by rotation here?
Right. These external factors are really the key drivers right now. Rotation here simply means money moving around from one sector or maybe one asset class to another. So understanding that the market is watching the Federal Reserve's next moves on interest rates and, crucially, how corporate earnings are shaping up. It helps you anticipate potential shifts. It's about connecting the dots, really, between these major macro events and the daily price movements we've just discussed, allowing you to maybe foresee where the market might pivot next.
Got it. So you've got a clearer picture of today's market then. A remarkably split or bifurcated equity market driven largely by tech, a crypto space with some clear winners and losers shaped by things like institutional adoption and regulatory fears, and a quietly firming metals market. It's almost like the market's speaking in two different languages right now, isn't it? One for tech and a totally different one for, well, everything else.
That's a good way to put it, yeah. So for your final thought today, maybe consider this. Given the market's current bifurcated nature, with tech clearly leading the charge, how might you interpret the underlying health of the broader economy based on that? And maybe think about what potential shifts could occur if, or perhaps when, these other lagging sectors, the small caps, the cyclicals, what happens if they finally start to pick up some real momentum? What would that signal?